thank you for the invitation to speak. I've been asked to speak about the impact of the Quality of Advice Review, and in some senses it's probably premature to do so because the government hasn't yet responded to the recommendations. But having said that, I think there has in fact been an effect, and I think it's been quite an important one, and that is that the financial services industry is discussing the role of financial advice, and they're discussing their role in providing that advice or not providing that advice. The media and consumer groups are also discussing it. And I think these discussions are especially important for the banking industry. And I think your response to the review is important for consumers. The terms of reference asked me to make recommendations about changes to the legislative framework applying to financial advice, which would help make financial advice, good quality financial advice, accessible and affordable. Now, financial advice, as you will all know, is not a regulated term, and when the terms of reference were drafted, and it's quite plain that what they were talking about was financial product advice in the Corporations Act sense. So it's wealth products, it's deposit products, it's insurance, but it's not consumer credit. But what financial product advice is, and I think I keep trying to impress this on everyone I speak to and in the review, is it is much broader than the advice that is given by a financial advisor to their wealthy client. It spans an extremely broad range of things, from general advice that you find on, for example, a bank's website about opening a bank account, opening a term deposit, buying mortgage protection insurance, through to conversations people have with their superannuation funds about making a contribution to the fund or switching to a different investment option, right through to what people traditionally think of as financial advice, being the comprehensive financial plan that you get from a financial advisor. So, in short, it applies to what banks do today. It doesn't apply when the lender recommends a home loan, but it does apply when they recommend an offset account or a savings plan to save the deposit for the house, or a mortgage protection insurance policy when the loan is issued. But the way that the law applies at the moment, in my view, doesn't serve the interests of your customers or consumers. What it does is it creates an incentive for banks and other providers to give general advice when people want personal advice. So general advice is advice that doesn't take into account the customer's objectives, financial situation or needs. And it can lead to extremely poor outcomes. And one of the cases that sat in my mind throughout this review was the case that ASIC brought against the BT superannuation trustee, Westpac Securities Administration Limited. And many of you will be familiar with that case. And in that case, the bank employees, the call centre staff, were contacting members of the superannuation funds and asking the bank superannuation funds and using social proofing, saying things like, people like you should have all of their money in a single fund. Do you want to save money on fees? And in the end, they were recommending and helping people to roll over their money, their other superannuation, into their superannuation account. These were existing customers or members of the superannuation fund. And the court said it was not efficient, honest or fair to use general advice and to ignore the information that they had about their customers to make a recommendation. That case sits in my mind. As it turned out, the case went all the way to the High Court. The full Federal Court and the High Court both said that, in fact, in this case, they weren't successful in giving general advice. So they built a model on general advice, which, as I said, was found to be not efficient, honest and fair. But ultimately, the court said, well, actually, the customer or the member reasonably expected that the information that they had about them was taken into account in making the recommendation. So this sits in the back of my mind, and I think, well, part of my review is about improving quality. How do I do that? So the way that I've thought about this is, what is quality of advice? What is quality advice? It is advice that actually does what the test for personal advice says. It is advice that takes into account my objectives, financial situation and needs to the extent that they are relevant. And so my first recommendation has been to expand the definition in the law at the moment of personal advice. It will prevent financial institutions trying to bring themselves within the general advice regime. And what it says is that if you have information about your customers, or they might think that you do, and you personalise your communication, then you will be giving personal advice. That's if it is advice at all. So that, of course, takes a recommendation or an opinion. Factual information is never advice, no matter how targeted, and my recommendations don't affect that at all. But what it does do is it broadens, potentially, the category of communication that you are having with your customers that is within the personal advice regime. And so I say, well, if we broaden that category, we can't rely on the 16,000 financial advisors to give that advice. So what would flow from that at the moment is you'd need a relevant provider, a financial advisor, depending on the advice. The advice would have to be in the best interests of the client, and they would have to be given, the client would have to, or the customer would have to be given a statement of advice. And it's all of those reasons that people don't give personal advice at the moment. So I needed then to look at what are the obligations that apply when giving advice. And I had to look at who can give that advice. Very, very quickly you get to a very, very limited category of person who is able to give that advice. And in the main it is you, it's the banks, it's the financial institutions who issue the financial products that people need advice about, that are the only people really that are going to be able to give that advice realistically. So what I say in my report is that it's not that you should give advice in spite of the fact that you issue financial products. It's that you should give advice because you issue financial products. How does that happen safely and in the interests of consumers? And I'm using that term broadly, not a best interest financial advisor duty. My answer to that was my recommendation that the institution who is responsible for the advice should have a duty to give good advice. What's that? Well, it's certainly not poor quality advice, it's not okay advice, it is advice that is fit for purpose. The duty contrasts with the existing duty to act in the best interests of the client in providing advice, because what it does is it focuses on the output. What is the content of the advice, and not on the process that goes into providing the advice. I think this is extremely important as more and more the process becomes more and more opaque. And that's going to happen increasingly with more and more advice being given by algorithm digitally. So these, in my view, these recommendations will help you help your customers. And I want to end by thinking about what will happen if my recommendations are not implemented. I don't think that you can sit still. I would suggest that more and more of the advice, so the recommendations that you give, and you may not even be thinking of it as advice, but the kinds of general recommendations that you give, that you send to people on apps, that you send even in direct mail outs, I think they still exist sometimes, but on your website, where it's targeting specific and ever narrowing cohorts of members, will actually be personal advice. I think that's inevitable. It's a fact of the nature of the information that you collect and the way that you use that. And at the moment, you can use that for your own benefit. I think you need to use that for the benefit of your customers as well. And when you do, you're going to be giving personal advice. And I don't think the answer is not to give any advice either. I think Joe Longo was quoted the other day speaking at a conference, and he used the term, what did he say? Green hushing. He's talking about people not saying anything about their green credentials, green hushing. Well, I would advise against advice hushing. And the reason I say that is I think you have a duty to your customers to point things out, to give them advice. If you go to a doctor, they say, oh gosh, let's say I've gone to a doctor and they say, I'm worried about your cholesterol, Michelle, you should go and have a blood test. Blood test comes back and they say, oh, your cholesterol's looking really good, and they ignore the fact that my blood pressure, is that in your blood test? I don't know, maybe it's not, but whatever. Something else is up and really dangerous, and they don't tell me. Well, I think the same applies to you. If a customer comes into the bank and says, here you go, I've got all this money, I want to open a 6-month term deposit, you know that they've got a home loan in arrears. I think your duty is to tell the customer that maybe they should think about putting that money onto their home loan. I think that was all I wanted to say. We've just got a couple of minutes. I don't know if anyone would like to ask a question. It's a bit hard to see. I think there's a microphone.
We've got a couple of microphones going around. Quick show of hands if anyone wants to ask a question of Michelle about the review. I've got one for you too, so don't run away anywhere, but just quickly. I want to ask you, I've got it here, I just downloaded it at treasury.gov.au, strongly recommend it.
Huh.
Here I am on page 1 of 267.
Well-written pages.
I don't doubt it for a second. What's doing something as comprehensive as this on such a hot button issue that's going to receive so much attention once released, and I can't imagine the number of submissions you receive coming in.
Hundreds.
What's the trade-off between that would at times be exhilarating and rewarding, and also at times an absolute nightmarish process, wouldn't it? Take us inside what sharing something as comprehensive as that was actually like.
I loved it. I was a pig in mud.
Really?
I've been living and breathing this stuff for 20 years. I've been thinking a lot about how it can be improved. I got to speak to people who were equally as passionate, and it was going through my mind the whole time. I didn't have to do anything else. I loved it.
How much of it landed where, if a few years before this process came along said, look, you're going to be asked in a few years to do this, how much of this lands where you pretty much thought it would, and how much of it goes into spaces quite different to where you thought the final review might have landed? And you can name specifics if you want.
Yeah, no, I think it actually did go in a different direction. I think a lot of people had been talking to me about, and I was thinking myself, do I separate sales from advice? That kind of idea. I very quickly thought no, because people don't distinguish a sale from advice. The thing that I was, as I said, in my head is general advice targeted to an individual is a bad outcome. So that much was there.
Fascinating stuff. Please give Michelle a big round of applause for taking us inside that incredible comprehensive document, which, as we said, available at treasury.gov.au.